The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends?
The following takes place between 2 p.m. and 3 p.m.
Well, we're up 27 points on the S&P cash, 358 on the Dow. The Nasdaq's up almost 70. Russell's up almost 7 points. So what are we looking at today? And, of course, as it was Friday, what we're looking for is the volume and maybe some liquidity. Liquidity is starting to pick up. It's been rather horrible, getting just a little bit better today. Now, as I say that, volume is not getting better. We were hoping for a stronger Friday. We didn't get it. On the New York consolidated tape, 1.9 billion, a little over, not 1.9 billion. Should be doing something like 2.3, 2.4 billion shares. So we're about 500 million shares light that way. If you look at the CBO equities market volume summary, we're at about 3.5 billion shares, and we should be probably closer to 7 by the end of the day. So that's going to be very light, too, on a fairly big move, following Friday's fairly big move. So volume is really kind of tapering out. This is where we're pretty much at the extremes of resistance. Maybe we break out and the volume is not that important. We have a lot of stocks just going above previous highs and not a lot of volume. We'll look at a few of those today. A few other things that are kind of making me scratch my head, but we'll see about that. And yeah. So today we have a nice day. All I have are long positions at the moment, although there's a handful of positions that I might get my hands on before the end of the day, where I might even pull the trigger short, and that would be on individual positions. I don't know if there's a lot to be made after today on the index positions. I suspect we're going to find a narrowing market in those, but we'll take a look. Yeah, we're going up into resistance. Volume's really kind of tapering off, and we'll see what the end of the day brings us. But there's a couple out here that look fairly good for what I'm looking at, so we'll keep an eye on those. And what else do we have? Well, that's kind of about it. Let's do a little history, then we'll talk about a bit of stocks testing highs on lighter volume.
Then it's all just a little bit of history repeating.
Scottish physicist Robert Watson Watt, considered to be many the inventor of radar, first demonstrates its feasibility on this day in 1935. Watson Watt had been experimenting using radio waves to locate thunderstorms and thought the idea of using it to detect aircraft. The use of radar is widely considered one of the key factors in the Allied victory in World War II, certainly the Battle of Britain. And, of course, throughout the war, they started coming up with much better ways of making radar. The British handed that off to us. And you know what? You pretty much have the same device in your home that was in this 1940s radar. It's in your microwave. Most people don't know it. That's what cooks your food. Same kind of thing, really the same device. And it just continues to be shrunken and made less expensively almost on a yearly basis. But now, who doesn't have a microwave to cook their popcorn and everything else? I've seen them for $35 walking through stores, so they're apparently not that Yeah, the radar range, probably after he cooked himself, the old radar range. Anyway, stuff's been around for a while. But on this day in 1935, first demonstration of it used for various things. And I thought it was very apropos for some of the work I was doing this weekend, and we'll talk about that. What else do we have? Well, let's just go ahead and get into some charts then. I don't think there's else much going on. I wanted to, where's it at here? Come on, there we go. I wanted to talk about a few of the news-driven stocks out here today. William Buffett was on his pilgrimage to have CNBC pimp his stocks, and he was doing that pretty much all morning, telling everybody about, how he loves Apple. Apple is everything. Pushing it back up here to 180.10, which is the January 18th high, got to 179.18 already today. That volume is 26 million shares compared to the 34 million shares. You still have, an hour and 15 minutes left. But you can kind of see from this low of February 9th, the volume has been lighter and lighter. And, Qualcomm, both Qualcomm and Samsung did very well in the Mobile World Conference. We talked about that on Friday's show with Tom O'Brien. But let's take a quick look at Qualcomm. I'm going to say Apple, of course, doesn't go to those things, so it doesn't really matter on that. Qualcomm showed off some very hot technology, as we talked about, again, a little bit of it with Tom O'Brien on the 3:30 show with him. Nice little pop-up on Qualcomm. Not so much on Avago news, but just coming out with very, very good technology for the road ahead. And the question is whether or not Avago is going to step up to 95 or $100, which is what it's probably going to take to buy Qualcomm. They keep on acting like they can buy it on the cheap. I don't understand it. They think they can, but I think it's a bit of hubris. And frankly, I wouldn't take any deal with them that means that we have to, that they, as a holder, I'd have to end up holding Broadcom's stock, because I'll guarantee if this deal does go through, they're going to drop maybe $20 pretty readily. So we shall see. Let's do this. Come on. Yeah, little internet issues. Okay. Broadcom, Avago just going sideways. Anyway, Qualcomm showed off some fairly neat technology. Samsung showed off their new phones, which take care of a couple of problems with Apple. I was kind of surprised to see Apple up a little bit this morning, and then saw Mr. Buffett hawking them ad nauseum on CNBC. Nothing like free advertising for your stock. It's not that it's a bad company. It's just, does the word sycophantic come up with Buffett and CNBC? I think so. Probably in the dictionary.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Having a little conversation about Qualcomm during the break. And basically the questions are, is Qualcomm vulnerable if it does not submit to Avago? And here's what it's all about. Qualcomm has the crown jewels when it comes to all the patents on all the cellular chips for the most part, the best ones. The one in the current Apple phone only will download at about 3/4 the speed that the Qualcomm chip in the Samsung will. And at the show, they were showing a new version of their MIMO chip, which works with the next version of Wi-Fi, and it's 25 times faster than anything in a cell phone today. So they've got some really nice tech. Of course, that 5G, they pretty much own the high ground on that one too, with patents and new products. Intel is the only one that really seems to be coming on with anything to compete with it, although unclear whether, the technical specs are good enough. Intel kind of coming in from behind on this and trying to pick up maybe the lower tier business out here from Qualcomm. But if you're talking about the high end of the market with the high end margins, Qualcomm kind of owns it. And, it's kind of like Walmart, you being a supplier to Walmart. They're always knocking at your door going, hey, you know what? We're just not going to pay you for 6 months, or you can drop the price 1% or 0.5%, or you can give us free shipping. And if you don't like it, you can go pound salt. We'll just run you broke. We won't pay you, and you can fight us in court for the money. Those kind of strong arm tactics are not uncommon. The difference is with Qualcomm, they do have the crown jewels when it comes to patents. And literally, their patent portfolio is so good that they could cut off all of Apple's imports into the United States if they wanted to get in a big war. And probably prevail in the long term too. And everybody knows it. What they're hoping to do, Apple and the rest, everybody wants to get rid of Qualcomm because they are using their patent portfolio to gain margin. And everybody just thinks that they should give away their chips. And Qualcomm goes, I know what we have. We've got the crown jewels here. We not only have the technology, we not only invented it, we not only came up with that, we patented it and put that in your pipe and smoke it. Well, everybody just says, you know what? It's older technology. I mean, it's been around for a while. You just need to give us a better price, or we're gonna act, man. We're gonna do something horrible. Well, Apple went that way, and they went with the Intel chip, and it doesn't download as fast. Now, is that the end all of be all? It isn't. But when we look at Apple not selling as well, you're buying the top tier product, and they're not putting in the top tier cellular and RF chips in it. And you know, what would it cost them? $10 more, $15 more, maybe, to put in all Qualcomm chips. And you know, I can understand it. Every dime is money on the bottom line, but they can do exactly what they did, was buy somebody else's chip, which isn't quite as good. It doesn't have the lineage and the background of RF technology. They had a lot of neat stuff at that show. Maybe we'll talk about that with Tom on Friday. But Qualcomm, you know, good innovator. They've got a defendable position. Software is not a good patent to have. Judges kind of look at it going in thinking, well, this is going to be a long fight and no one's going to win. Hardware, pretty easy to do to show that somebody else is infringing on your patent. And so hardware, a lot more defendable. It's not like these design patents or software patents where you can easily get around them. It is incredibly tough. And literally, they have the best of all the different technologies to put it all together. So I have to take my hats off to Qualcomm. But the way I look at it, just a bunch of people groaning and moaning about having to pay up for the best technology when they can buy lesser technology at a lesser price. But the question is whether they want to do that or not. Samsung does go with Qualcomm on a great deal of their products and technology. And I think this new phone is pretty hot from Samsung. And probably the most interesting feature I saw in that over the weekend was very high rate slow-mo. They can do 900 frames a second. So basically 1 second would last 30 seconds of video. So, you know, I could think of a lot of places where I'd want to have high-speed slow-mo video for seeing what happened at, 30 times what I could watch in real time, slow down and see what things are happening. So it'd be kind of a neat thing to have. I've got a camera that kind of does it, but I think it's at about 400 frames or 450 frames a second. So that's about half of what the new Samsung camera is. But pretty neat stuff. Anyway, you can give me a call at 877-927-6648. You can send me an email at path@tfnn.com or put a message in the den. Does Qualcomm need NXPI so it can manufacture its own chips? No. The reason that Qualcomm wants NXPI is so that they can cut off Apple from cutting them out. Apple's been all nasty, and of course they use the NXPI chip. And if Qualcomm buys it, then where do they have to go for everything? Can they be mean and nasty to Mr. Qualcomm? Well, maybe Mr. Qualcomm won't let them have their NXPI chips if they own them. So basically, Qualcomm trying to be a big monopoly and stick it to the Apple. And that's why Apple is spending so much money trying to design all their own stuff. Down in Texas, they don't want to be in that position anymore. So that's it. NXPI basically is the last piece of the technology that Qualcomm doesn't own in a smartphone, which is the near field communication chips. Even though that isn't such a big thing anymore, I don't think it really matters whether they get it. I do think it only matters in the negotiation process. If Apple had to come crawling on their knees to Qualcomm to buy the NXPI chips, that would be A dessert served cold, as they like to say. Okay, so what do we got out here? We're up 28 points on the S&P cash. We're watching the volume very closely. We're watching liquidity basically slowly move back higher, which is kind of interesting. It hasn't really started to move up. We're watching the dollar index, and it's flat. When we look at commodities, we're talking about gold up $2.50, silver up 6 cents, but no real big moves out here. The market continues to kind of settle out. Crude up 32 cents. And, you continue to look at those Baker Hughes numbers like we did on Friday. And it's hard to see that they can't even turn on more crude at any time they want. It seems awful expensive to me for the supply available at $63 right now. That's just me. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Had some email about Qualcomm. What do I see in this? Well, if they get bought out, it's one thing, but I think it's going to take 90 or 100 bucks, and it's probably going to take another 6 or 9 months to have this drag out. I don't know how Avago does it, or Broadcom does it, whatever you want to call them. But this seems to me like everybody's acting like that they can get away with murder. And I just think that everybody from Apple to Avago vastly overplaying their hand Qualcomm knows that they've got the crown jewels. And, you know, if you've got the next 5-7 years worth of technology for 5G, how do you get around them? And I don't think the answer is you can. Everybody's been trying to beat them up, but they just kind of laugh it all off. But it's interesting nonetheless. We've got a lot of stocks testing previous highs, or very close to testing previous highs. So we'll look at a few of those today. Tesla's one. It's back up right now, 3.3 million shares, going into a 6 million share high on January 23rd. Energy was off a little bit off this February 9th low. It continues to have super high short interest, so you want to let that thing go just a little bit farther than it should. And technology, Intel had a nice bounce today. There was probably nothing as easily how can I say it? I don't even know how to say it. But the whole thing with the flaws in the chip and everything else just seemed so well rehearsed and so overthought that it just seemed laughable on the surface to me, especially since everybody that talked about it knew literally nothing about what they were talking about. It wasn't that hard to download the example software and try running it on your machine and understanding what it could and couldn't do to actually get through some of what they call the vulnerabilities on Intel. I said that it would fade much like Y2K did in 2000. And while you still hear some people yelling and screaming about it, there has yet to be one hack that anybody's attributed to all this stuff. It's up today. I think that that's now in the rearview mirror. We're actually looking what's in the forward mirror for Intel. Everybody just kind of piling into this, and these stocks really, the thing I have to say is that the energy off that 4204 low on February 9th just hasn't had a lot of energy. I think this thing needs to consolidate probably around the 45 to 46 area for a while. You got to bounce out here today if you're long this thing. If it doesn't pick up by the end of the day, I'd probably say it's within a sell of a day or so. But energy's just not that great, which a lot of these stocks, the energy wasn't off that. Could it get to 50, 85? It could. Do I think it will? No. It's a good stock, solid company. But just I go back to Amazon in November of last year, where everything looked beautiful on it, and it still tanked into earnings. This continues to look very much like that. Just everybody that's in it is going to get in it, is in it. So it continues to be rather problematic, MSFT. And needs to consolidate a bit. Okay. Okay. Now, Microsoft also getting into its previous high, and this is what has me thinking the market's about ready to stall. 96.07, which is the February 1st high, had 40, let's call it 48, 49 million shares. Right now, we've got about 18 million shares. On Friday, we had 26 million shares. So we're probably going to get in, we're probably in that 26 million share race right now against that 48 million share high at 96.05. Could this thing come back down to 90 and then make the run to 100? I think that's more probable, or even just a pullback to maybe the 93s and consolidate for a while. Technology continues to be one of the stronger stocks in this market, but the actual strongest sector is, what is this going on here? Let's do this. The absolute strongest sector is computer security. We've got Pan W? We'll look at that chart next. Hacks and ETF with some of these securities in it. It's even up a little bit ahead of PANW, right? Which is out after the bell tonight, so we'll keep an eye on it. Palo Alto Networks also popping higher. But all these security companies, they didn't have much of a pullback, and they've had a huge run and are head and shoulders above the rest. So keep an eye on this after the bell. If there's going to be a breakout in the sector, everybody's betting on it, I'll put it that way. And so let's take a CYBR, take a quick look at that one too. We've got Robert in Chicago. How you doing today, Robert?
Hey, David. How are you? Thank you very much for taking my call.
No problem.
So I got a question. Ticker symbol GTT. What do they do?
GTT is Global Telecom and Technology. I'll read what they say they do on their profile. Nice gap out here today on the upside. Provides cloud networking services to multinational enterprises, carriers, government customers worldwide. Offers private, public, and hybrid cloud network solutions, high bandwidth internal connectivity and IP transit, as well as broadband and access services, managed equipment, security, remote access service, and voice and unified communications services. So let's see what these guys had to say today out here that changed everything. See if that's listed. Okay, they got says inter-route acquisition creates facts. Okay, so they got a hold of a huge backbone inter-route technology company. When you've got a breakout, you want 800,000 shares. The biggest thing is you don't have the volume so far, 550,000 shares. They bought another company.
Oh, okay.
And I guess it's a coup because it lines up and gets rid of some of their competition. So theoretically, according to what I'm reading here, they would be able to raise the rates a bit. They have a cloud service that competes with Amazon and Microsoft and Google, but it's apparently what they have is the ability for you to call up and say, hey, I need a super high speed internet connection between this city and that city. Right?
Okay. Yeah, yeah.
And you want to hang on through the break? We'll look at the rest of this.
Sure. Thank you, okay. David. I will.
We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back, hopefully with Robert in Chicago. You still there?
I am.
Okay. Did a little reading on this during the break, and they bought a company out called Interroute, which is basically the same thing they do, only in Europe. So now they hook up their systems in the United States directly to the ones in Europe and can offer basically 2 continents instead of 1, and that's why the thing's popping today. So we're basically looking at a U.S. company that's now starting to go global. The thought is that now that they're in 2 sides of the pond and a bigger thorn in the paw of the giant lions, that they may get bought out.
Oh, you think it's moving on a buyout? Because even if you look on Friday, I was like, this has been acting really well, at least. You know, so there's been no volume. Like, I know there's not enough today, but how about like?
Yeah, it's a $2 billion company, so it's not like it's the biggest thing in the world, right?
Right.
But it's getting big enough to be at least some competition. And the thought is that now they're not just a U.S. company; they're kind of an international company, that they could grow big enough that someone would just buy them out. So a lot of the bounce today, normally on a buyout, you kind of go down. But the idea is now that this thing's going to go through, that they can be a big pain to somebody else, and those people may just want to cash them out at $3 billion or $3.5 billion or $4 billion or something like that. So we're seeing the pop here on the thought that now that they're global, that it's much more likely that someone would buy them out.
Would you buy the stock, and if so, where?
I would buy it at 47 on light volume.
Wow,
maybe 47 and a half.
Away. I mean, it was there Friday.
yeah, it can come back. You know, this to me, this would be a longer term play. I mean, they're just getting this deal done, and you know, the buyout probably a year down the line. You know, if someone
I was actually thinking about this longer term. I wasn't sure what they do. I mean, they're not going to compete with the big shots on cloud, so they must be doing something like this thing on Interroute or whatever that is. They must be doing something.
Basically what they have is the ability to hook up very high-speed networks using their own fiber. So instead of going to somebody that may put your data on various fiber channels that may or may not cut out, they can say you need a terabit per second connection between here and there. We've got our own fiber, and we'll give it to you, and we'll guarantee you that connection.
Okay.
Right?
Got it.
So that's basically what this Interroute does too over there, which is if it doesn't matter if something's slow, but if you're talking about real-time stuff like video or real-time stuff that has to happen, and you can't have the internet go down between you and whatever on your 20 hops between here and the West Coast or something, they can give you that one guaranteed fiber to make sure that it does get across the country or from city to city or whatever. And a lot of times this is real important if you miss the plane at night. I don't think a lot of people understand that one of the most prized business for UPS and FedEx is just taking stacks of drives on the West Coast or on the East Coast and flying them to the other coast. From Amazon to Google, moving a lot of data very fast is problematic. So if you miss one of those, these guys are the kind of guys you can just call up and say, hey, I need the services from here to there, and I need it guaranteed. They've got 70. Well, the Interroute in Europe has 70,000 kilometers. So what is that? 5 miles? No, I'm just kidding. It's like 35,000 miles or something, 37,000 miles of fiber over there too. So it's one of these stories that looks fairly good, and the thing is it takes a while to build these fiber backbones out. The cloud services, not so much, but it looks to me like they've got a good system together from both the cloud and their own fiber to put a system together. So, when you go to Amazon, it's kind of catch as catch can on a lot of stuff. You're going to use their servers. Maybe they're fast, maybe they're slow. And it probably doesn't matter if it finishes now or within an hour from now. But if you've got to literally have a ton of data from one coast to the next, or in this case, from one continent to the other, they can give you that guaranteed connection. And it's interesting. I like the idea of it. There's been a few of these folks out there that look as for buyouts. Microsoft and Amazon went in together to drop their own fiber between the East Coast and Europe. They spent 300 million and some odd in the last 2 years to do that. That drove a lot of those optical companies higher, like AAOI. And now, of course, all that stuff, when these big projects roll through, they continue to be, problematic because it's heaven and hell. You finish those products, you're up at 103 in the AAOI, and now you're back down here at $26 and something. So it is interesting. I haven't looked at it tough. I'm glad you called in. I'll spend a little bit more time on it.
Speaking of Optio, there's a company out of Germany, ADV, ticker symbol ADV. It trades on the DAX. A is in Apple, D is in David, V is in Victor.
Yeah, I'm probably not going to pick that up here, but yeah.
Okay. All right. That's fine. Another time.
Okay. Good enough.
All right, David. Thank you. Thank you very much.
Thanks for the call.
Bye now.
Bye. Okay. Okay, just checking in here on the mail and some of the stuff I'm reading, getting back to that. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com or put a message in the den. Anyway, interesting company. Okay, so we're going to look at a couple others out here. I wanted to look at Amazon. As we said before, a lot of these companies testing previous highs on lighter volume. Amazon, of course, went through 1,500 today. I don't know why everything's so slow today. And it's back up. If this is right, yeah, 20. Oh, this is the 23rd. Yeah, what's going on here? We'll figure it out. We'll be back in a second.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Question in the den goes, does the market historically juice up when with Buffett and Becky Quick on CNBC? And yeah, it does. Yes, it was known last week. I think they talked about it on Friday. So I just think everybody knows that he's going to come on and tell everybody stocks are going higher, because that's what he always says. And he's saying Apple, buy Apple, or he's buying Apple hand over fist, which means he's probably selling it, because he's pretty good about doing that the other way. I heard him talk about it on Friday morning. I don't think that many people do, because it's always like 1 or 2 stocks. It's not the entire market. But I would imagine probably somebody front run on Apple, knowing that he was coming out in a big holder and he'd been buying it. Amazon is breaking above the previous high of February 2nd. That had 11 million shares. You got 3.8 million shares right now. Friday, you had 4.4 million shares. Probably going to come in with that, maybe 5 million shares. So you're going to be breaking through the February 2nd high on about half the volume today. Unless something drastically changes, that is it. You can kind of see a nice little curve from the high, the low of February 9th that had 14 million shares. Volume's just been declining. That doesn't mean that the thing's going to go to hell in a handbasket. I think that there's much better stocks to short out there. But there are a lot of these things out here that are hitting these highs and will be tonight. I'll have a whole new list of them tomorrow, probably in the newsletter, of these things attacking highs on lighter volume. And as we wrap up just the end of the show here, what do we have? Do we even have 2 billion shares on the NYSE? We've got 2.2 billion shares on the NYSE at 3 o'clock. Yeah, we probably need to be closer to 3 billion. So we're down about 25% on volume. So going to still go higher than the energy. It is just the air is getting thin up here. Just be aware of it. In the meantime, sell when you can, not when you have to. We'll see you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.